Higher oil prices, does it change your own calculations?
Well, not exactly at this point in time. I mean, as what we've heard just now, it depends on how high it goes. But it does complicate the central bank's inflation fight. And perhaps this notion that central banks are about to turn dovish quite soon, that notion is a bit premature, given that we still have, commodity prices that may go higher and, makes it difficult for central banks.
Also, what's making it difficult is trying to, I guess, grapple with the question how much tightening was done by the banking turmoil. I mean, what are your own calculations? How much more further can this tightening go?
Well, I think at this point, it does seem that the extent of tightening in terms of banking stress spilling over to credit tightening, that damage in terms of economic fallout could be quite modest. Which means that the extent of the rate cuts being priced in by the Fed, that the Fed is expected to perhaps hike one more time or maybe pause and cuts quite soon, that notion may have run far ahead of itself.
So, obviously we've seen that when it comes to the dollar weakness of late too. I'm just wondering how much lower can the dollar go, Mo?
Well, I think in the medium term, meaning in the next, about in the second half this year, you're likely to see a weaker dollar from here. But in the short term, I'm not so sure that the dollar weakness will extend. Perhaps we are more likely to see a consolidation first for the rest of this quarter. In that if the market pass back the rate cut expectation, that might provide some support for the dollar. I mean, as it is, I think we have seen markets pricing in divergence between the Fed and the ECB. So the divergence is well priced, but I think the divergence might have got a bit ahead of itself.
Okay, I mean, everyone's been very quick to kind of scoop in and buy euro, I feel like, on these dips. I'm just wondering, that the calls for 110 euro, I heard 120 today as well. Is that still kind of far-fetched?
Well, I think that's not far-fetched if you look at it on a 6 to 12-month horizon. We could get there in terms of a weaker dollar and a stronger euro. I mean, that's been our call. But I think in the near term, I suspect we are probably likely to be more of a range trade. A range between 105 and 110, and we are at a stronger end of range right now, and we might just see a bit of backed off pullback in the euro dollar as a result of, data holding up stronger than expected in the US, especially coming into the payroll numbers this Friday.
Speaking of a pullback, we're seeing a pullback in the Aussie ahead of the RBA rate decision. What are your own assumptions? Economists are divided, swaps markets saying 80% chance of a pause.
I mean, we are looking for a rate hike. This against the consensus, against the market pricing. We are looking for a 25 basis point rate hike. But I do acknowledge it's a very close call, and the market is looking for a pause, especially after the lower than expected inflation numbers. But I think that overall the Aussie should be the pullback should be well supported. In that even if it's a pause, it's probably a hawkish pause. And it's conditional pause in that the RBA will likely keep open the possibility of rate hike further down the road.